stocks at or near all-time highs has been the focus here on the Future Show so far this morning. Looks like that's going to continue to be the case as I take a look at the data as it comes across the wire here. Really nothing to derail this momentum we've been seeing. S&P is currently trading 55.79. That's basically right where we were headed into the number. Weekly jobless claims, I think, at the top of the list in terms of data this morning. 238,000, just above analyst expectations for 235. I mentioned last week at 242, kind of hitting that sweet spot. Looks like they increased that ever so slightly. Jobless claims last week up to 243, but the Philly Fed coming in at, Philly Fed manufacturing at 1.3, and looks like business conditions 13.8, prices paid ever so slightly higher, new orders slightly lower. Yeah, this is a pretty good number across the board. And also taking a look at some housing numbers as they come across the markets, receiving these fairly well, to say the least. I'm looking at the 10-year at 4.23 right now. I don't think that's going to provide a headwind at this point for stocks as we head into the cash open. Let's bring in Alan Nuckman. Let's bring in the chief market strategist at bullseyeoption.com to help us break it down, take a look at the numbers and market reaction to. Alan, nothing here really to derail the momentum we've been seeing in stocks. And in many ways, one could argue weekly jobless claims at 238,000. I mean, that's just going to fuel this strength, this bid that we've seen.
Yeah, you've got to be careful with the jobless numbers because we've got a hot market, whereas they want it to slow a little bit so that they can have some rate cuts. But, it's a momentum market, and it's a hot summer. So, I like everything we see. Nothing new here. They played this perfectly as far as the Fed goes. Like your last guest said, that the market doesn't even need cuts. It's our results of the stock market making new all-time highs. But let's focus on the Russell right now. I think that's got the best risk reward. It's consolidating like you talked about, which is rebuilding strength. It's between 190 and 210 for many, many, many months. A breakout of this range targets 230, which is another 10% higher. So I think the Russell has the best risk reward when you look at the stock indexes that have been up and away.
Okay, let's talk about that a little bit more, but I agree with you. It has been a hot summer, right? Unless you've been short this thing, and then it's been a cruel summer.
Bananarama.
There you go. Along those lines, 4.25%. We're below that right now in the 10-year. So that is going to help some of these small caps, especially if this continues. I mean, if we were to get below 4%, if we continue to see data like what we're seeing, for example, the Philly Fed, this manufacturing index, 1.3, below expectations for 4.8, below prior levels of 4.5. Yeah, prices paid were kind of high, right? But new orders are slowing, not cratering. I mean, that's what the Fed wants to see in order to get them to where they are confident they can lower rates, right?
Right, and that's the balance. You want good news, you want bad news, and
but not too bad.
But so far, the market's been perfectly in balance, and so the reaction is what I follow. I trade what I see, and I try not to think too much. But I think the market has set itself up very, very nicely. We've got earnings season coming out here after the 4th of July, so I think that's a bigger potential catalyst than any Fed action. Yeah, we're going to get a rate cut by December, but how that happens, there's a 10% in July, and if you get out to September, there's maybe, a 25%. So, we'll see, but the markets have liked the discussion, the tough love so far for the past couple of years.
Yeah, that's what we've been looking at, right? What's fueling this market higher? That's kind of our theme for today, and I would argue, and I agree, the word balance, I like that one, and the market does feel like that is the case here. Fed Chair Jerome Powell's used that quite a bit in terms of talking about labor conditions balancing and easing a little bit and in a very acceptable pace, right? And I agree with you. The market is focused on bad being good, but too bad would not necessarily be good, and good being good, but not too good, right, being good. So it's kind of found itself sort of in this sweet spot, kind of a interesting predicament in many ways when you consider.
Ben, you're hurting my head. That's why I said I don't want to think too much.
Headed into earnings. Hold on, Alan, I was going to bring it around here. Give me a second. Headed into earnings, I feel like that could be, again, to your point here, sort of that pivotal next catalyst. But we had a lot of apprehensiveness into that last round of earnings. So I feel like, maybe just more fuel for the fire here.
Well, Ben, you and I are friends. You're the king of but. Everything you say has a but included in it. So there's got to be some concern, some trepidation in your head with everything. So earnings are coming out. We'll see. The expectations are rather are a little bit higher than we've seen in a long time. So let's see. But corporations are making a ridiculous amount of money. We have $4 trillion sitting in cash equivalent. So that could come back into the market. So there's still some upside. Technically, we talked about S&P 6,000 months and months ago from a technical standpoint. That's the target. So yeah, we're in a momentum market. The risk reward is not as beneficial here, but that doesn't mean it can't go a lot higher. You just have to be selective. And you know where I want to be selective? I want to be selective in a lot of these commodity stocks. Freeport-McMoRan looks like it's getting ready to run. Copper held is right around its base at 450, which is a midpoint. If you look at GDX, you saw gold test and reject at 2,300, and GDX still has a lot more upside. It's 10% off its recent highs. So I think the best risk reward is in some of these individual commodity sectors and stocks.
Does that involve or require we see continued weakness in the U.S. dollar right now, or at least to see the dollar remain very much contained? Because one could argue, much like what we were talking about earlier in the show, crude in a range, the dollar's been in a range also, and that's been supportive of stocks.
Right. It has been supportive. So, the fact is the dollar has been here for longer, just like rates have been here for longer, not higher. I can't stress that enough. Here for longer. And if the dollar does happen to go down, that is a huge catalyst. So you've got earnings coming up and the potential of the dollar not going higher. Those are both very supportive of the markets, of gold, of IWM. Take a look at silver. Silver's like leading the way on this little bounce breakout. So we could see here it came back to its breakout point. It's held that support, just like gold and copper here have held this support level. So this could be that second chance that a lot of people have been looking for in these metals.
Alan, talk to me lastly about central bank policy decisions and this, kind of theme towards cutting, which we're starting to see, right? Swiss, today we saw Europeans, your ECB and the Bank of Canada as well recently, or I should say the ECB, right? The Bank of Canada held. But, what does this do for commodities? I'd imagine in many ways this could fuel the fire there.
Exactly. So eventually you're going to see the dollar head down. If it can get below 104, then it's going to start to rock and roll. And if you can see the euro currency get above this 108, 109 and test at 110, let's remember, you know how markets work. Everybody is on one side of this market. Everybody is bearish on the euro currency and been bullish on the dollar. So when that starts to unwind and transition, that could be some lot of fun for those people that are bullish. And we're in everything bull market. You talked about crude oil. Crude oil has popped, got to 81. A move above 85 gets things moving once again. And like your last guest said, things dramatically change from week to week and month to month as far as the mentality goes. And I'm liking the risk reward here of crude to put some pressure on people.
Change week to week in terms of the mentality goes, but he also said sell rallies in crude, and he was talking about buying dips in copper. So,
yeah, I don't agree with selling rallies in crude. I've been in this game too long to be able to pick just the one market that's not gonna rally. That's a tough game. That's almost being bearish. And I'm not in that game.
Hey, isn't selling rallies in crude kind of un-American as well in some ways, right? Hey, Alan Nuckman, appreciate you joining us here, taking a look at markets, the chief market strategist at bullseyeoption.com. Alan, thanks to you. Now for a couple developing